You've probably seen the advertisements for copy trading on one or even more different platforms. The premise is simple. You find someone who seems like they know what they're doing and then just copy exactly what they do. On the face of it, it looks like a clear winning strategy. You basically outsource all the research and hard work to someone who knows what they're doing. However, let's look a little deeper. Hello, welcome back to the Dividend Experiment, the channel that helps you build a portfolio that pays your bills. The content that we discuss is intended for information and educational purposes only, and should not be considered investment advice or investment recommendations. And that's where eToro's copy trading comes in, allowing you to mirror the strategies of successful traders. But before jumping in, let's explore the pros and cons to see if it's the right fit for you. What is copy trading? Before we talk about the pros and cons of copy trading, let's make sure we're all on the same page. So what exactly is copy trading? Copy trading is offered by various platforms, but we'll use eToro as the example for this video, which has probably contributed most to making copy trading popular around the world. Copy trading is a strategy where one trader mirrors another trader's positions or portfolio when they make trades live. It's particularly helpful for beginners who may lack the experience, time, or commitment needed to analyze the market themselves. This can be done manually or through automated systems. The traders being copied are often in theory seasoned professionals with extensive market knowledge. eToro provides detailed stats like the trader's historical performance, risk score, preferred assets, and even their trading strategy. You can see their success rate over time and how they manage trades during market swings. This helps you gauge if the trader's style fits your risk tolerance and goals before copying them. While the amount of investment is up to the individual, it's wise to still do some research. Even if you're following an expert, your capital is still at risk. So let's give an example for you to further understand. On the eToro platform, you can navigate and browse traders depending on their performance. So for this example, let's look at the top copied traders. These traders are the most copied over the last year. So let's see why a new investor might be interested in this idea of copy trading in the first place. The pros of copy trading. The good. Access to expert strategies. One of the main reasons investors turn to copy trading is the ability to borrow the strategies of professional traders. These traders might have spent years learning how the market works, understanding its movements, sentiments, and more. With copy trading, you get to leverage their expertise without having to spend years gaining that knowledge yourself. Instead of spending hours analysing the market, you benefit from their decision-making and experience. In the case of eToro, one of the requirements of progressing through the ranks of popular investors, the elite tiers are required to pass the CISI, Chartered Institute for Securities and Investment, qualifications, either level 3 or level 4. This means they aren't just casual traders, they've proven their expertise through rigorous testing. This certification adds an extra layer of trust, ensuring that the traders you're copying aren't only experienced, but also meet professional industry standards. So by copying, you get an access to expert strategies and some form of assurance that these strategies are backed by verified knowledge and sound judgment. Time saving. Let's face it, keeping up with the stock market can feel like a full-time job. In fact, for a lot of people in the finance industry, it actually is their full-time job. You've got stocks going up and down, news affecting prices, and countless other factors to consider. Copy trading cuts out all that time-consuming monitoring. You simply choose a trader to follow, and the platform does the rest for you. Your trades will mirror theirs without you having to lift a finger. For people with busy lives, this is a huge plus and has obvious appeal. You can still be an investor while focusing on other things like your career or family. And in fact, using the time you spend monitoring stocks on more productive activities is an investment in itself. Whether it's advancing your career, pursuing a side hustle, or simply enjoying life, you're putting your time to better use. Instead of stressing over stocks that you're not passionate about, you could be earning more money or spending quality time with loved ones, both of which have long-term value too. Easy diversification. Diversifying your investments, spreading them across different assets or industries, is key to reducing risk. You can follow and copy multiple traders who have different strategies. Some might focus heavily on tech stocks, while others might be into commodities like gold or even real estate investments. By copying traders who specialize in different areas, you're diversifying your investments without having to make all the decisions yourself. For example, imagine the healthcare sector is struggling, but tech stocks are on the rise. If you'd invested in both, your losses in the healthcare would be balanced by your gains in tech. In copy trading, it's similar. Copying different traders, each with their own strengths, helps lower the risk because you're not relying on just one trader or one type of investment or one type of strategy. Each popular investor should be stating what their strategy is on their page, so that should make it easier to understand what they're going for and how to diversify around that. That being said, it's up to their own discretion, so you can't count on them sticking to what you expect 100% of the time. Now, those are some key benefits of the concept of copy trading. However, it would be remiss not to address the shortcomings too. Let's take a look. The cons of copy trading, the bad. The future may not be like the past. Just because a trader has had a successful past doesn't mean they'll always succeed. Market conditions change, and what worked yesterday might not work tomorrow. This is important to remember because many copy trading platforms highlight a trader's past success to attract followers. Markets can be unpredictable, and even seasoned traders can misjudge trends or events. And there's a reason why you hear that line, past performance is no guarantee of future results, whenever you see investment products. It's because it's so important to remember. It's easy to fall into the trap of thinking, this person has made 20% returns for the last 3 years, so they'll keep doing that. But in reality, the market is unpredictable, and even top traders can have bad periods. What's more, you can sort by recent performance, which can cause a lot of issues in that it's showing popular investors with a bias towards their recent performance, which may or may not be sustainable. Fees and costs. When it comes to eToro, there are specific fees that you should be aware of. While eToro does not charge a fee specifically for using the copy trading feature, they do have other costs that can affect your overall returns. Understanding these costs is crucial as they can accumulate and affect your overall profitability. Make sure you read the fee structure thoroughly before committing to copy trading on eToro. Now, these are the cons, but the next point I want to make is potentially more serious for long-term investors. The ugly. Over-reliance on others. Another, and in my opinion, more significant potential downside is that you might become too dependent on others' decisions. If you rely on copy trading for a long time without learning anything yourself, you could miss out on opportunities to develop your own skills as an investor. Relying on copy trading is risky because it stops you from learning the important skills needed to become a smart investor. Here's why this could be a big problem. You don't learn how to invest. When you copy other traders, you're not learning how to analyze markets, understand risk, or create your own strategies. Investing is a skill, like all skills, that gets better with practice. But if you always rely on others, you miss out on the chance to improve. This means you won't be ready to handle challenges or changes in the market. Popular investors on eToro are required to post on their profile in order to be compensated, though these don't necessarily help you develop your own skills. Let's give an example. Now, this post is informative, and a lot of its information can be useful for determining your positioning or direction of the market. However, the popular investor isn't saying what they will actually invest in or what they'll actually do as a reaction to this information. Therefore, as a passive copier, you miss out on that learning experience. 2. You rely too much on others. Copy trading makes you dependent on someone else's decisions. If the trader you're copying starts to lose money, changes their strategy, or quits, you could lose money too, and you might not know how to fix the situation. This means you're not really in control of your own investments. 3. You get a false sense of security. Copy trading can make you feel successful even if you don't fully understand what's going on. You might be making money, but you're not learning why it's happening. This can lead to overconfidence, and when the market changes, you might not know how to respond, which can cause you to make poor decisions. 4. You don't grow as an investor. Becoming a good investor takes time, effort, and learning from your mistakes. Copy trading doesn't help you develop the patience, discipline, or decision-making skills you need for long-term success. Without these skills, you'll always rely on others and miss the chance to grow into a confident, independent investor. In summary, copy trading might seem like a hands-free way to make money, but it stops you from learning how to invest on your own. This might make it harder for you to succeed in the long run because you don't have the skills or knowledge to manage your investments independently. If you're simply copying their trades without understanding why they're making those moves, you could end up taking on risks you don't fully realize. So it'll be better if you equip yourself with some basic knowledge that doesn't require too much time. But at least you'll have a hunch whether the trader you're about to copy knows what he's or she's doing. The title of this video, The Good, the Bad and the Ugly, is perhaps a little harsh. I don't think the ugly is so ugly after all. Many people simply don't have time or interest to learn about investing, and in that case, copy trading can be a great fit. But is copy trading right for you? Copy trading is ideal for beginners who want to start investing without having to learn everything from scratch, as it allows them to participate in the market by following more experienced traders. It's also a great option for people with limited time, as it enables them to stay invested without the need for constant research and market monitoring. Additionally, those who want to gradually learn about trading can benefit by observing the strategies and decision-making processes of seasoned investors, helping them understand different techniques over time. If any of those sound like you, then welcome to give it a try using the link below, and then report back into the Discord community what you make of it. If you liked this video, and if you made it this far, I'm guessing you probably did, then I have some good news for you. I'm giving away my PDF guide to the 10 dividend investing commandments, or the criteria that I use to pick dividend paying stocks, and I'm giving it away to you for free. All you need to do is submit your email in the link below and it'll get delivered to your inbox straight away. Again, that's for free. But that's not the only benefit of joining the email. You also get updates on the almost daily dividend portfolio, interesting stock ideas or news, and special deals and free stuff that I can share with you. Thanks for watching, and I hope to see you on the next video. See you!